Viewers, the biggest story that we're tracking for today. Bears took firm control of the Dalal Street on Monday, as a wave of global panic triggered one of the worst sell-offs in recent years, sending benchmark indices into a free fall. The BSE Sensex plummeted 3,379.19 points, or 4.48%, to close at 71,985.50, while the NSE Nifty tanked 1,146.05 points, or 5%, to settle at 21,758.40. The carnage resulted in a massive erosion of investor wealth, with the market capitalization of all BSE-listed firms plunging by 19.4 lakh crore rupees, now down to 383.95 lakh crore. We're also being joined by PK Basu, who is an economist, to get us more insights into the matter. Thank you so much for speaking to Republic. I want to understand, Indian markets are mirroring the trends that are going on globally. What is the key reason behind this?
Well, obviously, there's a panic over the tariffs imposed by Trump and retaliation by China. I think there's a misapprehension that most other economies are also about to retaliate, and that is completely wrong. The EU, von der Leyen, the European Commission President, had spoken about retaliation, but she hasn't been able to persuade her membership. So the EU has not responded. The only country that has actually retaliated is China. The rest of the world is negotiating. Vietnam is openly saying that it wants to negotiate mutual tariff reductions with the US. India, of course, has been already in the process of doing so. So I think this is a massive overreaction. Last week, India held up very well relative to the rest of the world. There was a huge sell-off pretty much everywhere in the world on Thursday, Friday. India didn't see as big a fall. So today, India's caught up a little bit. But again, India is falling a little bit less than, for instance, the likes of China, which are going to be much more badly hit by these tariffs.
Right, sir. In fact, I also want to understand, like you said, that this is an overreaction. What do you think the current investor sentiment is like? First, and second, industries like IT and metal have been hit sharply down by 7 to 8%. Why do you think the specifics and likes of these industries have been hit so hard?
Hit because of a misapprehension that there's going to be a global recession. It's now well known that JP Morgan raised its probability of a recession globally to 60%. In my view, JP Morgan is going to have a lot of egg on its face a year from now. Others like Goldman and S&P, etc., have approximately a 35% probability of a US recession. Now, I think even those are very high numbers. It's very unlikely that there's going to be a recession in the US, primarily because most of the world is not going to retaliate against these tariffs. So I would see this huge sell-off as a good buying opportunity to buy into a lot of good stocks at much lower levels, especially stocks that don't have much exposure to the global market. So IT, of course, does have a lot of exposure to the world market. But I think if you look at, say, metals even, yes, they have exposure to the world markets, but India is very competitive as a producer of steel, aluminium, etc. And as long as we can protect our domestic markets from dumping by China, our steel and aluminium, etc., will gain market share globally in this environment where most of the world is appropriately placing anti-dumping duties on Chinese exports.
Right.
This is a global phenomenon. Everybody has understood now that what Trump said 8-9 years ago is absolutely correct, that China is not a market economy. It exports, its overproduction, its approach to manufacturing is to overproduce. They overproduce everything far beyond what is possible to absorb into the domestic market, and then they dump what is overproduced onto the rest of the world. The rest of the world must not allow this to continue. It's as simple as that.
Right, sir.
So I think Trump is right on this. There's a lot of useless noise in the markets at the moment. There's a lot of commentary that is effectively telling us that China is some sort of paragon of market virtue, which it absolutely is not. And the fact that China has retaliated is going to redound to its suffering in the future, because they already face 54% tariffs from the US, its largest market, and could well face even worse if they continue to retaliate against the US.
Right, sir. In fact, you are correct, and important that you pointed out that it's not just the tariffs from the side of the US, but also the fact that China has retaliated over these tariffs, that duties are down by such high percentages across the global market. Thank you so much, Mr. P.K. Basu, for speaking to Republic.